Remortgaging is the process of renewing your mortgage when your current mortgage is going to expire. A bit like your car insurance you need to renew each year, renewing your mortgage is a similar process. Let's look at the process and how to best approach renewing your mortgage. Let's go. Hi, my name's Alex Kerr. I'm a qualified mortgage broker and my passion is simplifying the mortgage process and leading you to mortgage success. Let's get into the vid. So whether you are renewing your mortgage for the first time or you've done it plenty of times before, the process is the same for everyone. We get in touch with our clients at multiple points before their renewal is due. 12 months, 5 months, 3 months, and for those who still haven't renewed their deal, 1 month before expiry. Now, the sweet spot to start looking at your mortgage options is 5 months before your deal expires. This is because a mortgage offer will last for at least 5 months, which means your current deal will expire within the period of the new mortgage offer, and then your mortgage can just switch onto the new deal when the current deal expires. If you haven't got a new mortgage sorted out in time, you will revert to the mortgage lender's standard variable rate of interest, which will be higher than your current rate, and you want to avoid that at all costs. The reason we get in touch with our clients 12 months before is just to let them know that the deal is coming to an end within 12 months, and if we are in a market where rates are rising, it may be worth considering looking at mortgage deals early to try and secure something else before rates increase. In this instance, you might need to pay a penalty to leave your current deal early. The advantage of securing something at the 12-month point is that the new mortgage offer will last for 5 or 6 months. Therefore, towards the end of the expiry of that mortgage offer, you have the advantage of seeing if rates have gone up or down or stayed the same. If they've gone up a lot, then you can compare paying a penalty and keeping the rate you have secured at the 12-month point versus getting another mortgage offer based on the rates when the current mortgage offer is expiring. The remortgage process can take anywhere from 4 to 12 weeks. This depends on the mortgage lender you are using and the type of remortgage process you are going through. If you are just looking to renew your mortgage without borrowing any extra funds, then that should only take around 4 to 6 weeks. If you are borrowing extra funds for home improvements, debt consolidation, renewing a lease, or buying another property, then this type of transaction can take longer because there's a bigger process to go through and other parties could be involved in the process. Now, even a straightforward remortgage where you're not borrowing any extra can sometimes take longer than expected, and 9 times out of 10 it's because you are using the free legal service provided by the mortgage lender. I will often recommend that my clients decline the free legal service and instead take a cashback, where I then instruct a solicitor myself on behalf of the client. This is because the free legal solicitors get overloaded with work and their service becomes extremely slow and poor. Try and avoid Enact solicitors if you can. I've had terrible experiences with the firm and try to avoid them at all costs. That's Enact, E-N-A-C-T. It's also worth noting that there is something called a product transfer, which is a mortgage deal that your current mortgage lender will offer you once your current deal expires. Now, quite often you can get a better rate by remortgaging to another mortgage lender, but that's not always the case, and it's always worth comparing a product transfer against the best remortgage option. When you submit a remortgage application, the mortgage lender will need to do a valuation on your property to confirm how much it's worth. Sometimes they need to visit the property, and other times they can do a drive-by or a digital valuation without the need to enter the property. You'll choose a mortgage product, provide your employment details and payslips, and the new mortgage lender will need to obtain a redemption statement from your current mortgage lender, which is a statement of how much you owed them. So when your new mortgage does go through, your new mortgage lender can pay your old mortgage lender. Okay, that's the ins and outs of what you should be thinking about when your mortgage renewal is closing in. Do want me to go through your remortgage options with you, where we will compare a product transfer to the very best mortgage deal we can find on your behalf. We work with over 100 banks and building societies and can help whatever your credit situation. Just book a free, no obligation chat using the link in the description below. And of course, if you've got any questions, just let me know in the comments. Mortgage warning. As a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. So thanks for watching today's video. Please check out the show notes for a recap with access to any links discussed today. And if you feel like you're getting value, please consider subscribing and ringing the bell to receive notifications so we can carry on providing you with value. Have a beautiful day. I'll see you in the next one.